And let's just make sure that we are live and the audio is good before we start talking. Nothing worse than talking to yourself.
Totally.
And here we are. Let's see. Okay, there we go. Worse than talking to yourself.
Boom.
Ugh, I hate doing that. Anyhow, everybody, we're live. The audio is good. The video is good. Everything's fantastic. So first of all, welcome to the DCA over here at Digital Asset News, where we try to take the breakdown and the ups and downs of the market and try to make sense of it all. So the gentleman to my immediate left, you will know him as Benjamin Cohen, and he is the star over here at Into the Cryptoverse. You can find a link to his channel in the description below. And also underneath, which I'm gonna change over, there's James. Hey, James. And James is the host of Invest Answers. And of course, you can find his show and the link to his show below. And today, gentlemen, we've got some pretty interesting things to talk about. And I think it's the same question that we've been getting the same thing on each one of our channels, which is the very first question which we're going to go over, which is the bull market over and how far will we drop or have a reversal? Second one is what parameters would you use to call a definitive bear market or even a, God forbid, a crypto winner? And then next question is, would you short the market right now? This will be right up James's alley. Last one is, or next to last, the Fed is raising rates and tapering bond buying. How does this affect equities and also for crypto? And lastly, whale versus whale. It seems like some are accumulating and some are dumping. So who wins this one in what time frame and so on and so forth? I'll let you guys just answer that as you will. So let's start off with number one. And I'll start off with Ben, because he's our TA guy. He knows it better than most, we'll say. Ben, what do you think? Is the bull market over? How far will we drop? Or is there any reversal on the front?
Hey, thanks for having us on again. I don't know that I'm better than most, but I think that we also need to be careful about how we define bull markets and bear markets. And as I was discussing with you before the show, like in the stock market, if you have a 20% drawdown, everyone basically just agrees that it's a bear market. And, they're not necessarily ridiculed for calling it a bear market if there's a 20% drawdown. It just it is by definition bearish when the stock market is down 20%. And for crypto, the way I normally think about it is if we're below the 20-week SMA or the 21-week EMA, if you prefer, then the market is just bearish. It doesn't. And I would also say too, there are different types of bear markets, right? Like there's the 2018 type bear market where it's just down for a year. And then there's also like the second half of 2019 type bear market or the summer 2021 type bear market. I mean, like the second half of 2019, we went from 14K and we just bled. And then ultimately we capitulated in early 2020 to $3,800. And, by anyone's standards, that drop 70% or whatever would be a bear market, but no one really calls 2019 a bear market. So I would say that in the same way that you could have called this summer a mini bear market or some type of a bear market, we are in a similar phase today, right? I mean, it just is what it is. It's not what we want necessarily, but that's just what we're working with right now. So look, I mean, my thoughts on the matter are, whenever we go below the 20-week SMA or the 21-week EMA, it normally takes us 3 to 6 months to get back above it and at least try to resume an uptrend. And so it's been about a month and a half so far. So I think earliest we're looking at potentially getting back above it would be, like mid to late February is probably the earliest. So I think we still have quite a ways to go before we're looking at rosy skies, to put it that way. And right now we're just fighting a pretty brutal downtrend. And I think a lot of it too is these types of markets can easily spook investors because it just doesn't make sense. Like, it's just dropping day in and day out. We look at the illiquid supply. The illiquid supply is going up. Bitcoin's being drawn off exchanges. On-chain data always looks bullish though. So a lot of things just don't really make a whole lot of sense in that sense. But I would also argue, like one sense of like making it look a little bit better is that typically major capitulations are usually what lead to the next uptrend, right? We saw that happen in December 2018. We capitulated, then we went to 14K. We saw that in March 2020. We capitulated, then we went up. We saw that in May or this summer 2021, and then we were able to go back up. So look, bear markets suck. Some of them last longer, some of them last shorter. But I would argue the real money is made in bear markets when people stick around and then wait for the bull to resume.
Yeah, that's true. And then James, same thing to you. And before you take it away, I will just say this: this is one of the few channels on R3 where you're going to hear someone say the word bearish, because we have to look at reality, not what we want it to be, but we have to really look at it subjectively and go, this is where we are at. However, just like Ben said, does this mean that we're going to be in crypto winter for years? No. There is bear market, there is bearish tendencies, there is a bull market and bullish tendencies. James, what do you got for us?
Yeah, there's a lot to touch on here, and I like your outline agenda, but I will talk about where I think we are. First of all, as Ben mentioned, equity markets are considered a bear market if there's a 20% correction. But we live in much more volatile times with disruptive stocks. So 20% is very easy to achieve. But historically, I've always considered crypto being 2x equity volatility. So in my head, 40% correction is a bear market. And we are exactly 40% down from the highs in Bitcoin right now as we speak. So that's kind of coincidental. But I think there's a couple of things for us to look at. One is this run, everything is different. We have to take into account some of the surprises, unrest in Kazakhstan, macro headwinds like tapering and rate hike, and a whole bunch of other stuff. The world is very, very different. A couple of things that are interesting to note is some of the whales are still buying hard. Like Binance bought, I think, 43,000 Bitcoin at $45,000. A whole bunch of whales are layering in at 49, 47, 45, probably now. Also, some whales are selling. So it's kind of a mixed bag. But what I would like to share is just a quick visual view, because I think it explains kind of where we are better than anybody, if I may, for 1 second.
Absolutely. Let's see some.
Let me see if I can do this. StreamYard. I'm just going to share my entire screen. Boom.
There we go. Okay.
All right. Chrome tab. Let me see if this works. Yeah. Can you see what I am looking at here? Whoops.
Absolutely.
That's the messy one. Sorry. This is the cleaner version. And hold on a second. I don't want to be sharing that. Let me share again. Because that has all my chicken scratch all over it. And I've got a number of TA charts. Let me go back to, where was I?
Mad scientist, James.
Yeah,
Mad scientist play.
Hold on a second. Share screen. Got to get better at this. Chrome tab. There. All right. So let me see if this is fully visible.
Load this up.
Just to give you guys an idea. So I was always talking about kind of the 3-step of where we are. Now in the summer, we were at step 1, the 30K. We hovered around there for a long time. Step 2 was the 42K, which we hovered around in September for 4 weeks. And step 3 was the 47K, where we played with for like 32, 34 days. I can't remember exactly. Well, unfortunately, we fell off our step 3 and we broke through step 2, which is the 42K floor. Now, coincidentally, step 3 is the 0.618 fib level. And the question is, where could we go from here? Now, first of all, I'm quite surprised that we broke through 42K, but we're hovering around there. And sometimes you can have a wick that wicks down hard, like $1,000, $2,000, $3,000. But it's where it stabilizes what matters. And we're sort of stabilizing at the 42K floor. And these are approximations. Now, the interesting level next, and it'll be interesting to hear from Ben, is the 0.786 support level at 39K. And coincidentally, that is the Mike Novogratz level that he believes we could bounce to as well as we go forward. So that is kind of my view of the world. Now, how do I stop sharing?
You just did it. We're already done. Yeah, good. Nice. All right.
So I'm wondering, Ben, do you see any of those levels? Do you see us going to 30? Like Mike Novogratz said, 38 to 40. He originally said 42K. A lot of people were coalescing around this 42K level, which tends to be the herd mentality. And he revised, took that back and said 38 to 40 could be the new floor if we break through. And who knows, if all hell breaks loose, Gray Swan event, 30K could be on the cards again. That would take us back to 6 months ago. And that's just the nature of the beast. So what do you guys reckon?
Yeah, I mean, I think when you guys asked me a while back what I thought, my best guess was 40K was, and the reason I think I said that, there's 3 reasons. The first reason is that's where we held the line at the 20-week SMA, 21-week EMA back in September. Historically, we don't go below that. Doesn't mean we can't, right? There's always a first time for everything. I can't imagine the next 100 years of Bitcoin's, history, we're always going to hold that rule. But there is that. There's also the fact that, there has been a lot of support and resistance at 40K. Like during that first run up in January of 2021, we kind of went to 42K, got rejected back down. During the summer drop, we had a rally that took us to 40K, got rejected back down. If you overlay the fractal from, say, like the summer drop to today and assume we're doing some type of like Wyckoff accumulation at 40K as opposed to 30K, you can make the same type of argument. There is a decent chance that 40K holds, but if it doesn't, then we could. I mean, there was something I was looking at recently because I was trying to learn from the way investors before me have felt in markets and kind of what they dealt with. And one of the charts I've looked at is looking at like the stock market chart from like 2000 to 2010, and it was actually like a double top. It went up, it came back down, went up again to a slightly higher price, and then it came back down to a slightly lower price than it went during the middle time frame. But then on the third attempt, which was closer in time between the first 2 peaks, on the third attempt it went up, and ever since then it's actually just been in an uptrend since that time. So I think that, yeah, like if I would like to see 40K hold. That's like my best case scenario at this point, right? It's easy to say that, of course, we're already trading at right around that level. If we break below it, though, I certainly 30K is in the cards for sure. And if we go down to those levels, I have to imagine that most people are going to think the party's over for a long time. But I don't think it necessarily would be. I think we could easily bounce back, and we're just sideways between 30 and 60K for a while.
Exactly. Ben, there's a good chart you should check out. It's the S&P 500 divided by the growth of money supply over the last 10 years. You'd be surprised.
Oh, yeah, it completely changes the perspective on everything if you divide it by the money supply.
Yeah. Good.
So, yeah, like I would say this, if we drop down to 30K, there's going to be so much, there would be major capitulation with what as far as the sell-off goes, it would just be, I think it'd be astronomical, which I think would lead me to my next point, or the next question. So we already talked about the bear market. You guys clearly laid out that you believe, and I believe too, that we are in a bear market. If we use James' answer, 40%, as far as the volatility and the drop down, makes complete sense. And then, but the next question then is, because there has to be a definition, and that is like what Ben was talking about. Are we talking about like a crypto winter? So I want to make this very crystal clear. Are we talking about a crypto winter that goes on for months and years like 2018, 2019? Or are we talking about bearish activity for this small time frame? And what would you consider a crypto winter? And I'll ask James on this one first.
Okay. That's an interesting one, crypto winter. So I have to look back to history. But before I do that, we can't look at history anymore because everything is different this run. But typically, I defined a crypto winter is when something like Bitcoin stays under the 200-day moving average for an extended period of time. This bull run, we've been through it 3 times, and that makes it very unusual. So you could assume we've actually breached this crypto winter. So I don't like the idea of the term crypto winter. I don't think it makes any sense anymore. I see it more as crypto seasons. So, I'm very optimistic for spring 2022. I think we could consolidate here for 30, 60, maybe 90 days. But from there, we should go up. Now, another thing to consider as well is we have to realize, despite all of this nervousness, typically the people who are feeling bad are people who got to the party late. I know people that bought in October or November, picked the top, nailed the top, and they're suffering right now. So deep sympathy for you guys out there. But anybody else who got in any other time during the year did well. Now, the big factors why I don't believe there is a crypto winter coming is money is coming. Q1 money is coming. Look at all the big banks in Germany and Italy and all around the world that are enabling retail investors to jump in. The narrative digital gold is working. Gold is bleeding. Bitcoin is going up. Adoption is going up. Adoption of all crypto. You know, some people say we're at 250 million users right now. I believe that could go to 1 billion crypto users before the end of this year, end of 2022. And that's kind of, it's just, I hate to sound like a very overly optimistic person, but just the supply is so scarce and the demand is coming. And therefore, I think the only way is up. We're not going to be flat for 3 years. It's physically impossible by all the macro stuff that I see, even with maybe the potential Fed rate hike, little tapering, etc. That's what I see.
Yeah, we're going to talk about that in a second. So Ben, anything to add? Because it was a great response. You defined it. We talked about it. People when they hear it, they get anxious. But you said, hey, you know what? It's not a winter for a very long time. Look at what's on the horizon. I think that's a big thing we have to keep track of as far as look out. When in doubt, zoom out, take a look at the big picture. Ben, what do you got? The same type of thoughts or anything different on that one?
Yeah, I did just share my screen, so I don't know if you can enable that.
Got it.
Yeah, I guess the first thing I'd like to say is, I mean, for anyone who lived through the last, through 2018, I remember 2018 and 2014 as well. And, you never really go into it thinking that's what it's gonna do. But in 2018, I remember people saying in 2017, like, wait until the Wall Street executives get their bonuses, wait till the Chinese New Year's over, all that stuff.
Yeah.
And so I would say this, like, I would certainly say that I think James is right in the short term. Like, we still have we got some work to do at these lower levels. Like, I don't think we're going to be putting in new all-time highs in like 30 days. I think we have some work to do with some of these lower levels. But later in the year, I do think there's a high, like, I would say it's more likely that we trend up later in the year than we keep trending down. One of the charts I've looked at before is this one. And basically the idea, and I like this way of modeling Bitcoin a lot more over, say, like the stock to flow model. The reason is because I think that Bitcoin is better modeled with logarithmic growth. The idea that most of the gains occurred earlier on in Bitcoin's life cycle, but that doesn't mean that gains can't keep coming. It's just that they're going to be diminished as a function of time. But in terms of it, to answer the question explicitly, the idea of like a crypto winter and a bear market, one of the things you can note is anytime we go below the fair value, that's when we kind of get that long phase where we have to spend below it, going sideways for a year. Unfortunately, this is not a great indicator for calling a bear market. It's basically once we go below it, we've already gone down, and now we have to go sideways for a year before going back up. You'll notice in 2013, we went down to the fair value and we held it, and then we continued moving higher. And there was nothing wrong with that, right? Even though back then, by the way, that was an 80% correction in the short term. But it did not stop Bitcoin from putting in new all-time highs later that year. Okay, so technically that was a bear market, right? It was 80%. It was 2 times what James said is the threshold, so anyone would have called that a bear market, but we still put in new all-time highs later that year. In 2018, we fell below it, so we had that long accumulation. So I'm looking at this and saying, well, as long as we're sort of staying up in this level, I still have hopes that the cycle will continue on. If we were to do something like this, and drop, and coincidentally, the lower bound on this is corresponding to the upper 20s, like, and just in a few weeks or months, a month or two, it'll be about 30K. It will be where that level is. So I have hopes that the cycle will continue to go on. I would say a potential invalidation of that is if we come back down to this level, then I just think it's going to be bleak for probably until the next halving at that point. If we go back down and we're going back to like 20K or something, it's hard to make a bullish case, I think, in the short term if that happens. Like, just seems like it'd be hard to.
Yeah, I can see that. That's for sure. I will just say this. The one thing that concerns me is just because of the Fed's notes that came out on Wednesday, that caused the traditional market to tank. And coincidentally, our market to tank. I mean, pretty precipitously, let's be honest. So if we go into that, I know, James, you have the idea, you have the thought, and it makes sense that big money is coming, but it seems like the traditional finance players are more skittish than we are, because just that mention dropped their I mean, it wasn't by as much a percentage as what we have, but it seems like it dropped a lot on their end, and it really came and bled over to this one. I know there's a lot of money coming out there, but it's interesting to think, can they keep that up?
Yeah, but what's very bizarre about that is anybody who could read the tea leaves, we knew about that in December. We knew that was coming. So I thought it was so strange the way the market was so startled. But I think it was a confluence of items too. I don't think it was just the Fed notes, because they signaled very clearly, and that's what Jerome Powell does. Yeah. Like smoke signals are coming out in December, what he was going to do. No surprise there. Maybe a tiny bit of acceleration, but I think it was a confluence of the OMI stuff that's going on and some geopolitical unrest. That's the issue.
Well, maybe it was just like the real smart money knew it was coming, and they had already done those plays before that day, Wednesday even came about. And then it just led up to this part, and then everybody knows, and all of a sudden, like, you know what, I got to sell. And that's when we see that type of thing. All right, so that takes care of that part. Next question, before we get into it, I'll say this. Well, the question is, would you short the market right now? I know this is this goes against the diamond hands type of mentality, right? We know that. However, these are the questions that we have to ask. And again, we have to live in reality, correct? So if we take a look at this, we already defined the bear market, and it makes a lot of sense, right? And then one of the things it talks about here, just like Ben had said, it's cyclical or long-term, could last for several weeks or months. Short selling put options and inverse ETFs are some of the ways in which investors make money during a bear market, right? Well, if we're talking about this, the sentiment, the fear and greed index is 18 today. If we're taking a look at the shorts, yeah, not too bad.
Yesterday. That's a win. We'll take that.
We'll take it. And then the total liquidations just 48 hours ago, it was almost $1 billion. I think it was 850 million. And now we see total liquidations. If you were liquidations, if you were playing the shorts, you probably do pretty well. And actually yesterday, I even put out a tweet. I said, hey, if you're on leverage, I feel sorry for you. And then a couple of people said, Rob, you don't know what you're talking about. I just made a boatload of money by shorting everything. I was like, oh, that's right. You probably did. So the question is, would you short the market? And this would be right for James.
Well, I short a lot of stuff all the time. And in full disclosure, I'm currently short what some people call Bitcoin crypto proxies like Coinbase. And I've been in that short for a while, since it was like 320. So I'll cover it at 225. I don't know where it is right now. I should be close to there. But one of the things that I'm always afraid of is because I just look at, again, on-chain stuff. Forgive me for that, Ben. And I look at the dwindling supply draining by 100,000 a month. All it takes is another Tesla-like $1.5 billion investment, and we are going parabolic. So I learned a long time ago never to jump in front of a freight train. And that's what I believe Bitcoin is. So in addition, to answer your question in more detail, the time to short it was at 68K. And I thought about it with some of the Beto stuff, but then I just felt really confident for Q1, but I didn't anticipate some of the other stuff that actually went on behind the scenes. So I would not short at this level, but I would feel pretty confident selling some puts at this level, which is the opposite, a little bit out of the money. Like
gotcha.
A $38,000 put, I'd feel a little more confident selling something like that.
I gotcha. Ben, what do you think? And we talked about this before. Me and you are kind of like the same, but what do you think about shorting any part of crypto?
I mean, I wouldn't. I mean, it seems like shorting it after a 40% drop into a major support area would probably be a good way to get wrecked, I would assume. Because I mean, even if the direction is ultimately down further than 40K, still seems like there's a good chance we could bounce, before that happens. I would say, like, I don't ever short Bitcoin. I do sell it sometimes, like back in earlier this year, like in January, February, March, and April, I was selling Bitcoin. So that's probably about as close to shorting it as I actually get. Like I just sold most of my Bitcoin back then. I think that was a little bit more clear back then because we had just gone up 20x in a relatively short period of time. And most indicators that I use were just flashing it's like a huge sell. So I did. I mean, in hindsight, shorting it at 69K, I guess, is the right answer. But if I didn't short it then, I'm not gonna short it at 40K. So no, I mean, I wouldn't short Bitcoin, but that's just something I would never do. So
and it moves too fast. It can spring up and jump out of nowhere when you're least expecting it too.
I mean, the volatility of crypto already basically gives you like, those kinds of returns anyways, I guess. But I don't know. It's just my opinion.
Yeah. Well, here's a quick follow-up. Would either of you go long?
Oh, yeah.
Leverage, but on leverage.
I actually nibbled a little bit on Bitcoin a few hours ago, under 42K, just a small piece.
Yeah, can't go wrong buying the dip, that's for sure.
Yeah,
all right.
I consider it parking. Like if you don't need the money for 3 months, it's one of the safest places you can put it. So I look at it as a money market account.
I like that. Yeah, and I can't. Shorting the market is not in my DNA. I've got a pretty long term. I just see things pretty long term. I know, like right now, if you have come into the market like James talked about just recently, it's a sucky day. It's a sucky week, and it's probably been a sucky month. Let's be honest. If it's just Bitcoin and especially Ethereum, but just remember, like we all got into this a while ago. I was 2017. I think Ben and James were 2019, 2020, somewhere around there. I remember, or even before, was it before then?
I was watching Bitcoin heavily in 2017.
Yeah.
Watching it going up, and it said, I have this discipline of never chasing. And I remember my brother-in-law was buying close to 20K, and I was like, oh, I want to, but I didn't. And then I started gathering in 2017, or sorry, 2018 after the dip.
Okay. And Ben?
But that was it.
I started following the market in 2011, but I was a student. I didn't have actually any money. I bought a little bit during 2 cycles ago, and then I saw it go up back in 2013, and then I didn't sell any. I saw it come all the way back down. And then in 2017, for the first time, I actually took profits.
Okay.
So 2017 was like the first time I feel like I actually like came out and made something of it before it went back down.
No, shoot, you guys were like way back when, and just like when I was. So the point of the story is, if you get in like 2017, 2018, we've got years and years to get adapted to this. So these types of fluctuations aren't a big deal. I know it sucks right now because you're like, hey, I'm down 20%, 30%. But if you wait over time in the market is more important than timing the market. Okay.
Exactly. Yeah. And just to illustrate as well for the audience, Bitcoin is up about 760% over the last 660 days. So it's up about 1.15% a day. And how many assets can do that? So when you zoom out, there are the numbers.
You know what? And go ahead, Barry.
I was going to say, one thing I wanted to point out too is going just quickly, because I had this thought of going back to the whole like traditional bear market versus bull market. When people think of 2019, no one thinks about it being a bull market for Bitcoin, right? Like it's not like, hey, we think of 2019 as a parabolic year or anything. Bitcoin went up 4x that year from bottom to top, right? 4x. And because this has not really been the same type of traditional bull market that we've seen in the past, it certainly stands to reason that, either later in 2022 or maybe in 2023, we could see what happens if we get a repeat of 2019. I mean, a 3 or 4x move gets us well over 100K, right? So just remember, you don't actually have to have a year where Bitcoin goes up 20x or something just to get us to 100K. We're actually a lot closer to 100K than I think a lot of people think in terms, percent gain, it's only 2.5x from here, which I know right now in a downtrend seems like a lot. Whenever we're moving down, no one can ever imagine it going up again, but whenever we're going up, no one ever imagines it going down again. I do think we'll go up again, and I just remember it doesn't have to be. Sorry if you hear my kids crying. It doesn't have to be the typical bull market that you think of, where it just goes up only for 2 years straight.
Yeah, no, and to see, this is the thing that, like what you guys just said about the percentages. Like I know James, again, you said there's money coming in. When I think about hedge funds, and we take a look at. Their whole job is to beat, index funds, and only 3 or 4 beat the S&P 500. So I always think to myself, if they are as smart as they say they are, and Bitcoin has gone up this much, and just Ethereum, and these are like the blue chips, why don't they just do more of that? It makes absolutely no sense to me why the big money wouldn't come in that way. I don't know.
Grandmas at the age of 80 who DCA into Bitcoin are beating 99% of all hedge funds. Riddle me that.
I don't know. So, it makes me crazy. All right. Yeah. So next to last question, the Fed is raising rates and tapering bonds buying. How does this affect equities, and in the grand scheme of thing, also crypto. Because again, like we talked about, it seems like they're very skittish. It's not like we don't see a lot of traditional finance players being a lot of like, seems like they're not a buy and hold type of crowd anymore. It seems like they just get rich and get out, and any kind of sign of trouble, they're out of there. It's weird. So Ben, what do you think about it? How are we going to go on this one?
I mean, I think historically, if you look at every time like the Fed's tapered, I don't think the stock market has put in, I'd either put in losses or not huge gains like that year. Doesn't mean it has to go down. Like it could just be like single digit gains or something, like a lot more tempered than like 25%, which is what we saw in 2021. And again, as you said, hedge funds, only 3 of them beat the S&P, which by the way, most hedge funds close down because, it's like 2 and 20 and there's the carry. So if they do bad one year, they basically just have to shut down because they're never going to catch back up to actually start turning a crazy profit. So a lot of hedge funds are actually dumb money in disguise as smart money hedge fund. But 2013, right? I mean, I think we tapered in 2013, the market went up, right? So look, I do think the stocks are extended, but they're always extended. And my thinking on the stock market for this year is that we probably won't see like a 25% gain again, like we saw in 2021. But I think it's more likely that we have single digit gains than single digit losses. I think it would be fair to say it's more likely. That's at least my own opinion on it. I also think it's interesting too, because we saw the dollar shoot up after the Fed minutes. Like it shot up while the stock market shot down and crypto shot down. Now, since then, the dollar has gone back down to a lower level than where it was when the minutes were released. But crypto hasn't actually done anything in response to that yet, and the stock market hasn't done anything in response to that yet. So I don't really fully understand why the market reacted the way it did. As James said, it seemed like it was fairly standard back in December with what was going to happen. And I skimmed it and I was like, all right, this is basically what they said. But yeah, market participants freaked out. Are we going to have 20% corrections this year in the stock market? Probably, but I actually think we'll still likely end the year in green.
Sounds good.
In fact, I made a video right after the last Fed meeting telling in December exactly what was going to happen, and that's what was going to happen. So there's video evidence of it out there. But my take on this whole situation is, yes, they will taper. But remember, people don't really understand what taper means. That means they're slowing down the amount of bond purchasing. And yes, they may stop by March, but they're going to find an excuse to start printing again. And remember as well, they will do maybe 3 25 basis point increases, which is not that much. But the more they increase interest rates, the more they have to increase the deficit because the financing costs increase. And that will also, in turn, slow GDP and could trigger some unemployment. That means they got to print again. So we are way beyond the point of any return right now. Mathematically, they can't stop printing money. I've had many conversations with macro experts about this. I've analyzed the numbers myself. We're good. It's going to happen. This is just like saber rattling to calm the market down to try and get a handle on inflation. Inflation is not going below 10%. Therefore, the stock market 2022 has to go up by at least 10% or else there's zero returns. That's the other thing. And my take, finally, regarding Bitcoin and how crypto ties into all of this, Bitcoin isn't exactly fueled by quantitative easing. It's a narrative that will be driven by chasing alpha. So you look at the sidelines, there's $4 trillion of money and there's 20 trillion of negative yielding bonds. All need a home. Where are they going to put it? They got choices. Real estate, it's all sold. BlackRock bought it all. S&P 500, very extended. It's above its 60-month moving average over the last 2 decades. So it's time for that to kind of slow down a bit to just 10% gains. And historically, if you look back at what is the best performing asset of the last 13 years, 12 years, it's Bitcoin. So I do believe there will be further allocations as per people like Ray Dalio now saying 1 to 2% is a no-brainer. And we'll see where it goes down. So that's what I see. There's just so much money that needs a home. Where are you going to put it? People will allocate, and it doesn't take a lot. It doesn't take a lot of allocation of that, say 4 plus 24 trillion. Like you need a tiny sliver for that to jack the price of Bitcoin through the roof.
It all makes sense. And then just like what Ben had talked about, I don't think when we see all this money just floating around, I don't understand why it actually can't find its way into where we're at right now, into the crypto and digital assets. It just doesn't.
That's the maturity. The world isn't ready. The world still doesn't understand it. The world is still afraid of the volatility, afraid of the risk. They're afraid of Satoshi reappearing, that type of stuff. But they're getting over that hump slowly but surely.
Well,
I don't know.
A spot ETF later this year could potentially help with that, I think, too. Like if Grayscale, I mean, I think, what is the timeline on it? Like summer 2022 or something?
I say June 2022.
Yeah, I mean, like, people have asked me, well, and you said it too, like, what's the narrative, right? There's got to be some narrative to get the ball rolling again. Maybe it's a spot ETF, and people kind of buying in anticipation of that, and that would give a lot of people a lot more people exposure to the asset class, so they can just go buy the ETF. I mean, obviously, we're going to just go buy spot Bitcoin. Like, we're not going to go buy, or we'll just go to the exchange and buy it. But there are a lot of people out there that don't want to, they don't want to be responsible for, having their crypto, or even trying to figure out something new like an exchange that holds just cryptocurrency.
Yeah, I know that you guys, the ETF, I just do not see it. I mean, as long as Genzel's in there, I just don't see him actually doing it. June, maybe, but I've been hearing ETF since I got into it. Still, only thing we have is futures, and that's garbage.
Yeah, the futures ETF was a precursor for the hedge funds to be able to play. His brothers back at Goldman and other places. So, but it has to come. And if it doesn't, the US will just drain money. And, people like Kathy Wood is already pumping money into the Canadian ETFs right now.
Right. That's the thing. Like, if they don't do it, they're severely hurting the United States, because it's going to stifle innovation here. People are just going to go elsewhere. Like, if they're not going to, companies aren't going to stick around in the United States forever if we keep having these, lack of clarity on the markets, or if they just keep not allowing for spot ETF. So I think I'm with you, Rob. Like, we've been hearing it forever, right? I do hope that this is the year, though. I hope that this is the year.
Yeah. Well, last thing I will say is that I know we want money to come in, but look at how skittish the markets are just by a whiff of the Fed doing something crazy, like, raising rates by, a quarter, 3/4, dropped it. But again, it recovers, or it goes sideways 24 hours. Last question. And this, I think, is one of the most telling ones. And I think, James, you did a video in this yesterday about whale accumulation. It seems like there's a side of whales that are massively accumulating. There's another side that's just selling off. So the question is, which one's going to win? Which one, in the grand scheme of things, is going to be the big winner? So because you did that video, James, take it away.
Well, I didn't even know I was about that. Sometimes I can't remember what I did yesterday. Every day bleeds together. But it was kind of pointing out, hey, everybody was freaking out. I was like, well, look what the smart money's doing. Look what the big players are doing. You've got Sailor accumulating as always. That doesn't necessarily mean anything. You got Binance. That 43,000 chunk of Bitcoin is a massive chunk. You look at the on-chain, 100,000 is going illiquid every month. So 12, 13 months from now, at this rate, there'll be nothing left. Now, I think who will win? There'll always be a little bit of manipulation, but that level of manipulation will get harder and harder, because every time the whales drop their 8,000, 10,000, 12,000 Bitcoin on the market to cascade it during a low volume tide, the snipers are there and they're grabbing it and they're not able to buy it back quick enough. And I think that's kind of the funny play we have. So long term, if you have, like anybody out there, the big message is, if you got a 3-year time frame, you're good. Just DCA in. If you're a speculator and you need a return in 2 months to put a down payment on a house, don't play that game. And that's just the way I see. So short term, traders will continue to dump on stuff. There will be a little bit of sideways chop for the next 60, 90 days. And then it should be back up by everything that I see. So which whales will win? I think gathering. I think some of the smart whales, even the ones that have been around for a long time, they're still layering in. They're buying 500, 1,000 Bitcoin every $1,000, $2,000 dip. You can see that on Whale Alert. I looked at some of those numbers this morning. So I think it's all good. I think the whales that continue to accumulate up, because they're waiting for the 100,000, then they'll play games and start dumping more, perhaps. But they know we're going to that level. The question is when. Is it 9 months from now? Is it 2 years from now? It's going to happen. We just don't know when.
I'm okay with that. I'm okay with 100K. Ben, what do you got?
I'm okay with 100K too, but I would say, like, by the time we get to 100K, my guess is a lot of retail aren't going to be there to experience that, because they will have capitulated long before. as we're seeing today, right? Like as we're seeing today, like a lot of the, I mean, yes, well, there are some whales selling. There's also a lot of retail selling for a loss right now. Okay, like that's a fact. We know a lot of people are selling for a loss, and I've always sort of wondered, because I never really fully agreed with the stock to flow, like the idea of going up that quickly, or the idea of non-diminishing returns, right? So I always wonder, like, how are we going to get to 100K if everyone's thinking we're going to 100K by December of 2021? And so I think the answer is, well, it wasn't ever going to happen. And the answer is it's going to happen. It's just not going to happen when people are thinking it's going to happen, because what we do know is whenever Bitcoin breaks its prior all-time high, it typically goes parabolic. And the all-time high is at 69K now. So for us to get to a new high, we have to go to 70K. That's not that far removed from 100K. So by the time we get to 100K, I feel like a lot of retail investors are going to be kind of late to the ship. In terms of going back to the question about the whales, yeah, in the short term, I think it's anyone's guess, because the whales that are selling today could be buyers at 30K if they dump it that low, right? And so they could win both ways. Although if 40K holds, then obviously it's not looking good. I've also noticed there are a lot of whales who accumulated in the summer. They have not yet sold any, but they're not buying any either. So I thought that was interesting, because they bought the summer drop, but I haven't seen them yet buy this drop. So I'm kind of waiting to see, like, okay, are they going to start buying this drop? When's that going to happen? Because remember, every time we drop another few $1,000s, we unlock more potential buyers, right? So in the short term, I'd say, like James said, if you need the money in a few months, it's not a game you want to play. If you have a long-term outlook on it, it's completely irrelevant, because Bitcoin will very likely trend up with time, and it's only a matter of time before we get to those levels that we're looking for.
Yeah, I gotta agree. For most of what you guys said, I agree. Something.
Where do you disagree?
That ETF, I'm sorry, I don't think
okay.
it's happening, man. But I gotta tell you, to be honest with you, what a difference time makes. Because I remember sitting here where people are probably sitting watching this video, getting so ticked off at watching YouTubers and listening to or reading the tweets and going, how can these people be so calm? God damn, I can't believe they're so calm, because if we just went down 30%, 40%. And now it's a total role reversal. And I totally understand now. It's just because when you're in the market for so long, you kind of see things and you kind of know, okay, it's not so bad. I've got my positions. I've done the job that I was supposed to do when it was hard and boring, and dollar cost average in, and played the long game. And that's the easiest and the best way that I can see it go forth. So
yeah, that triggers a question for both of you in my mind, because you can nearly gauge what the crypto market is doing by looking at the sentiment and comments on Twitter and YouTube. It's kind of funny, like the negativity just overflows and people are like really upset. But one of the issues that gets me, I did a detailed deep dive on Luna with very detailed price prediction models. My price prediction for Luna is to go to like 135, 138 by the end of the year, which is a 2x. Okay. Now, the comments were like, a 2x in crypto? That's so stupid. Who would ever invest in something that just gets a 2x? But one of the problems that I think the new people to the space don't understand, we had the most incredible year last year. If you got into anything in crypto in 2020, you made a killing in 2021 that you could have thrown a dart. But now it's a different world. People aren't going to get their 10x, 100x gains anymore. But what do you say to them to set realistic expectations? Because if you look at the average hedge fund return, you look at the average mutual fund return, like very few mutual funds even beat the S&P 500. So look at ARK Invest, one of the best investors of our time, Kathy Wood and her team. They got crushed. Their average fund was down 49% in a year when the stock market's up 28% or whatever it was. So what do you guys say to people to set realistic expectations for not looking for these 100Xs anymore? And not gambling on crazy cryptos, money grabs, as Ben calls them.
Well, like for me personally, when people are, first of all, I can feel the despair sometimes in the tweets and the comments, and believe me, I feel it because I've been there. When I talk to people, I always just ask them, well, first of all, I have to know, like, what are your goals here? Like, are your goals to ride this out all the way kingdom come and diamond hands forever? Or is your goal here to stop working your 9 to 5, your soul sucking job? If you have that, maybe you love your job, I don't know. Or is it just to make a little bit of extra money? the big thing to me is when I'm talking to everybody and we're discussing these things, and I know like some people are down, I just say that it's the same type of advice I give everybody else. It's just time. Time usually kind of heals everything over the long haul. Now there's some projects that are out there that you probably should get out of, ones that probably aren't going to do too much, but that's for you to decide and go for it. I always talk about the UTT. Look at the utility, you look at the team, and look at the tokenomics. And if you can do that and kind of find a good project that you want to write that project out. And then, but there's sometimes you actually do have to get out. And that's just kind of what I tell them. Ben?
I think that was a great response. I mean, the only thing I would say would be, first of all, whenever we're in a bearish trend, no one can ever imagine crazy gains again, right? Back in 2018, 2019, I remember tons of people saying, don't buy Bitcoin, don't buy Ethereum, because their market caps are already so high. They can't go up another 10x. Okay. Ethereum was at $80, and now it's, I mean, even with the drop, it's still at $3,200. So we need time, right? This is what we need, right? We just need time. We need lots of it, and we will trend higher again. If you look at a lot of the richest people in the world, they don't, like Warren Buffett, right? He doesn't care what the market does tomorrow, right? He doesn't care. It's completely irrelevant. And the reason is because you just assume that the market will trend up with time. And I think that's the general idea. So to manage expectations, I think that what people should do in general is make sure you're invested in projects, first of all, that you actually believe in and weren't just shilled to you somewhere, that you have no idea what they are. So I've said for a few weeks now, like, consolidate those positions into actually useful coins. Now it's up to your own judgment to figure out what those useful coins are. But I think that would be the first thing. But then also, I think another thing to do to manage expectations is to not assume that there's always going to be a parabolic rally next week. Okay, and that's what I think is causing a lot of the pain today. Is I just feel like there were so many people calling for a parabolic Q4 of 2021, and it was hyped beyond belief for 3 years, right? I mean, a parabolic rally in Q4 2021, just because it was parabolic in Q4 2017. So I think the best way to manage expectations is to invest, right? Just DCA, and then eventually we'll go back up, right? But until then, it's somewhat silly to say that it has to happen by tomorrow or the next day or the next day, because no one really knows. I mean, is actually the complete and honest truth. No one really knows exactly when it'll go up, but I do have high conviction in that it will go up.
Yeah, and I will say, before we get to this question, I will say this. For me, I thought it was, we're going to see some, like I always said, the fireworks. And I was wrong on that one. I thought that we were going to hit that. Just didn't happen. But what does that mean in the long run? I sit back, I take account of what happens, and just take a look and go, okay, it may not happen this month or next month, but it will happen. I know where things are going. I just can't tell you exactly when it's happening. All right. The question this is for James. Would you hold all your Solana at this point if you still hold a 5x or hold? Don't necessarily need it right now, or 10x with your spirit. So what would you do, James?
So I check myself every single day, and I check the top 20 smart contract platforms, and I analyze them in great detail. And I check out the team. I check out the money flows, both in and out. I check out the technology, the adoption, the TVL, the dApps that are being built, the integration, the scalability, TPS, and I still come back to the same thesis. Nothing beats Solana. Two things come close. Nothing beats it. So I still put the money there. I still buy in now. If you are in your situation, Miko Man, what you do, take the headache off the table. You bought it $20. People are complaining, it's up 7x. It should be up 10x or whatever. It's going to $400, $500. We just don't know when. Like everything else is delayed. But take your initial $20 off the table. So if you have a 7x, take a seventh off the table. Let the rest ride. Or if you find a faster horse, stick it there. That's what I would advise. That's what I do myself. And I've been debating with myself, what should I do with my Ethereum? That's my biggest struggle right now. Should I take the tax hit because the cost base is very low and just move it to somewhere else? Or do I have faith in the deflationary Ethereum going forward? Do I have faith in Vitalik and his team to solve all the problems that they have? I'm still holding, still waiting. But again, I check myself every day. But man, if you're concerned, take your initial investment off the table, sell that, keep the rest, let it ride. Or if you've identified a finder horse, and I like that thing from Rob as well, the UTT, utility team and tokenomics. I look at 10 things and just keep checking those things as well and watch for the tide to turn.
Yeah, makes sense. Ben, do you have any Solana?
I have a very small position that I only got. I got it actually fairly late. I only got it because everyone always asked me about it, but because I never owned any, like I never had an opinion on it. So I was like, well, maybe if I buy some, I'll just be naturally inclined to follow it a little bit more.
Yeah,
Unfortunately, I haven't really followed it anymore. I mean, to be completely honest, like I missed the boat on Solana. Like I thought about buying it at one point and then I didn't. So no, I can't really give you any great advice on Solana. I will say though that, I mean, Solana, like a lot of layer ones, I still think they will continue to ultimately trend up, but I mean, we're currently obviously in a correction. And so, I mean, we could certainly go much lower if Bitcoin, if 40K doesn't hold I mean, all the layer ones will go down for a little bit if 40K doesn't hold. And I think what James said makes a lot of sense. Like, it's not the worst idea in the world to take some off the table, like get your money back. And then you can use that money to go do something else, right? Like make another investment and hope that goes up 5x or something, right? So it's not the worst idea in the world to do that. But at the same time, fundamentally, all of these projects, they haven't changed from where they were 2 months ago. It's just that market sentiment has. And so, yeah, I would mostly agree with what James said.
And the way I've done well in life is to have very high conviction and very few names. The more names you hold, the less your overall returns will be because there'll only be a few winners. But that being said, I do hedge my hedges. And what I mean by that is, for example, I had a big position in Ethereum. I got concerned about Ethereum. Is there an ETH killer? Searched high and low for a long time, found it, what I believe to be it, and got into that as my hedge against Ethereum. And that's worked out pretty well. Now I have a hedge against Solana, and that's Phantom. So I buy that too.
Yeah,
and as a side investment is Luna as well. So they're my kind of three big ones right now.
Yeah, like I mean, like when Solana came in, like just like Ben, I missed the boat at $1.25 or whatever else it is. But I know James was talking about it. Mike the investor talked about it. I'm like, yeah, I should look into it. I got some. And I was going pretty heavy for a while. And then, you know, you had that shutdown. Then there was another that DDoS attack and things like that. So like if it wasn't for like, and let me just explain this. Every project has an issue. Nobody is perfect. If there was one project that was perfect, it would already have taken over Bitcoin. And it hasn't hit that part yet. So there's things that concern. Can they, you know, get their way out of it? Sure. They got like rock stars as far as like, the developers. And that's what, follow developers. But it does, like, that concerns me on that. Ethereum concerns me because 2.0 isn't coming out until it ain't coming out next year. I'm pretty sure about that. And then you've got problems with Cardano. Believe me, I hear about people behind the scenes. You got problems. I mean, you've got problems with Avalanche. I'm not going to go on, but you see what I say here.
And just to check one point you said as well, they had one outage for 17 and a half hours. Okay. The rest was congestion, no DDoS attack. That's congestion. It's basically the system being hit so hard by too many transactions at the same time because the transaction fees are so low. And by the way, the same thing happened to Matic a few days ago as well. And the same thing's been happening to Ethereum for years. So it's called congestion, everybody. So be careful you say 4 outages because you rattle a lot of people.
I just wanted to hear you say something about it. That's all.
No, it's completely true that like literally every layer one has some, like, you can poke holes at anything. By the way, we talked about this coin a few weeks ago, and I just had to mention it. What do you guys think about Chainlink? Because it's actually doing something, and this was one of the reasons why I always liked having it in my portfolio, is because I remember, back in 2019, 2020, the market wasn't doing a whole lot in terms of altcoins. Link was just going straight up. So I'm like, man, if there's any confirmation that you need that the market is at least short-term bearish, it's the fact that Link is actually, it's resilient. It's one of the most resilient coins when the market is bearish that I've ever seen, for sure.
Absolutely. I think it was December 30th or New Year's Eve. And I was looking around to deploy a little bit of capital. I was looking at all my top 20 names. Where am I going to stick it? Stock market, miners, whatever else. I put it in Chainlink because the the TA on it looked incredible, and I knew it had no downside. And I wanted an asset with no downside, and it's done very, very well since then. So it's funny, if we're looking for, you mentioned what is a bear market indicator or a crypto winter indicator, that is Chainlink going up. So it's a classic one.
Yeah. This was from, well, first of all, there's a question about what about investment into Mara, like Bitcoin by proxy? I think James, you might get into Riot, Mara, those type of stocks.
Yeah, I've analyzed all the miners. I don't like Marathon or Riot or any of those names. I sold my HUD 8 right before year end. I cleaned out my closet, got rid of everything. And but I do own CleanSpark still, which took a little bit of a hit. Got in at 10. It's now under 10. I do believe of all the names, and I'm doing a reviewed miner analysis, that is still one of the best. But I look at 20 different factors to value them. So I don't like the one that they mentioned.
Which one do you like, Riot?
No, CleanSpark.
CleanSpark. Interesting.
And I like HUD 8 as well. But HUD 8 got a little bit frothy, so time to take some off the table. Remember, when Bitcoin rebounds, these miners will explode. That's what happens. But when the hash rate goes through the roof, the miners suffer because their cost of goods sold, which they're not selling, they're hodling, goes through the roof too. So
Listen,
it's all related.
Yeah, miners are they're gonna be something big, especially with the miners that come from Kazakhstan. Did I say that right? Kazakhstan?
Yeah, Kazakhstan. Yeah, they got shut down. Yeah.
They got shut down, which is good. I'm happy for that. And we covered this yesterday about clean energy or green energy, where they're thinking about classifying natural gas and nuclear as clean energy. And I was like, great. You know what Texas has? It's got a lot of natural gas. You know what also has? A bunch of miners. So everybody in Kazakhstan can come over here and start working. Fine. And that's what I got. And then I just want to answer this one. He says, it's easy for you guys and me now because you have taken your initial investment out. And that's a pretty good play. People talk about diamond hands, but in all honesty, if you're not taking out profits along the way, you're setting yourself for a very big fall. And I remember when I had an exit strategy, and it was tough because I was bad at it, but there was one or a couple actually hit. When Bitcoin hit 60K, I actually took my 20% out, and I was called a moron, which is probably true, but it doesn't matter because when I took that 60K out, it pays for things like this, and I can actually put them in other assets. So yeah, if you if you're thinking about it, take your initial investment out, let the house money go. Okay. I can't say that. If you sell, yeah, I think that's it. Listen, this has been a very long one. We're over almost at an hour right now.
Ooh.
So there is one more here. Two quick questions.
Having fun.
Two quick questions. What would you invest for teens in Roth IRA? And for cold storage, do you recommend multi-sig or have multiple cold wallets? Ben, take the one about the cold storage one. Or both of them if you want.
I mean, with a Roth, I guess are they talking about like crypto exposure?
Would you invest for teens? Like would you put your crypto into a Roth IRA for your kids later down the road?
Is that what they're saying?
I think so.
I mean, I have crypto in a Roth. So, it's nice because you can actually take profits on it without taking the tax hit, you know? So yeah, I would, for cold storage, or for storing my crypto, I actually basically do everything. Like I have some on, multiple cold wallets, some on other wallets, some on, I have a little bit on exchanges. Sometimes you just have to have a little bit on exchanges so that you can actually have like limit orders and that kind of stuff set.
Yeah.
So I actually use all of them. I like to spread my risk around in case I don't have single point failure or something if one thing goes wrong.
Cool. James, what do you got? I don't think you do Roth IRAs, do you?
No, I don't. No.
Yeah.
I like to have my long story, but I like to have flexibility. But regarding storage and self-custody, it's a very persona specific. It really depends on who you are, how sophisticated you are, etc. And be very careful. I actually did a video on which storage system is best for which personality, and check that out on my channel too.
Awesome. And I will just say this. If you're thinking about a Roth IRA, you can do one of these things, which is what Peter Thiel did. Peter Thiel, he put $2,000 into his Roth IRA and turned it into $5 billion. And I talked about that. There's a link in the description, talks about iTrust IRA and how he did that, because it was mostly just his shares with PayPal, which were nothing, and turned into $5 billion. He didn't pay 1 iota of taxes. So that is it for today, gentlemen. I want to say thanks. It was a long one, but I think it's good to kind of ease some fears. It's good to finally hear the word bearish market, and not everybody, totally fall apart, for Pete's sakes. Don't laugh too hard, James. It's okay.
No, I'm going to get my bear. I had one here.
And
I had a little bear. Somebody took it. But I have a little bear that I have, and a bull.
Because there's nothing, just like Ben said, there's really nothing to be worried about. It takes a little bit more time. We're not talking about winter here, where it's going to last for 2, 3, 5, 10 years. It's just a bearish sentiment. And like James talks about, there's a lot of money coming in Q1 2022, and I hope he's right.
Crypto seasons. We are now in what are you call crypto seasons. Every 3 months, it'll be something different.
I'll take it. All right, guys. Thanks so much for coming by. I appreciate it.
Thank you, audience. Thank you as well, Ben and Rob, and great to see you both again. And next week, we'll be on Ben's channel. Thanks all.
Bye, guys.
Bye, guys.
Bye.